and welcome to our second client Data Center Business Quarterly Research Review webcast, outlining recent results from the Data Center Benchmark Report. My name is Allison Crawford, and I will be your host for today's session. Business Research's focus is to provide business research to accelerate our customer success, and this webinar series is a part of these ongoing efforts to find new ways to support you and your business, helping you get the most out of your research investment. As the computing practice at TBR continues to grow, we will connect our readers with our analysts every quarter. This connection, TBR and our analysts will relate our company-centric research to overall data center trends to provide additional opinions and insights into the quarter's performance. In the next 30 minutes, Senior Analyst Christian Perry will delve into the trends driving the results featured in the 2Q12 device benchmark to which you subscribe, followed by Q&A of these trends and how they will affect you. Before I pass this over to Christian, there are a few logistics I'd like to cover. First, we will be recording today's session and posting it to the TBR site on YouTube, TBRI channel. We encourage you to visit our channel to watch this presentation or any others we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send us any questions or comments to the Q&A function or the chat function. Christian will address them at the end of the presentation. Or, if you'd like to set up a client query for more detailed discussion, please reach out directly to Christian at the end of the webinar with a CC to your account executive to set up that discussion. So we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find the slides and the other our thought leadership pieces, other webinars, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. Introduce Christian Perry. Christian has been covering and writing about the data center market for over 20 years. Heading up our research in this area, and his strategic advice is helping several of the largest data center vendors identify new opportunities and revenue streams. Now, with that, let me hand this over to Christian.
Awesome. Before we discuss the highlights from our 2Q12 data center benchmark, I'd like to provide an overview of the report to give you a better sense of how we approach the market. The benchmark is a data center marketplace view built upward from the companies that participate in it, and it's led by product type and geo. So we cover the business of data center vendors in our regular syndicated vendor reports. The data benchmark gives you a unique look at the overall marketplace that exists from the individual efforts of server and storage vendors. This view is delivered through a business lens designed to help our customers understand how vendors are performing in the market and what they're doing to affect that performance. This is a tool that can provide clear insights into the leaders and laggards in the market, which can help to provide direction for readers of the benchmark. In the webinar, you'll see and hear highlights from the TBR Data Center Benchmark, but note they're just a small portion of the overall insights contained in the report. Today's data center market is shifting quickly to accommodate new needs around speed, flexibility, and the bottom line. IT departments are facing massive pressure from the business to show quick time value for technologies that might take months or even years to fully mature within a complex environment. Terms such as convergence are now becoming a mainstay in larger data centers as business leaders expect immediate results, not configuring products that may or may not play well together. Yet departments face pressures from above. They face pressures from within. Data, mountains beyond mountains of it, continue to stream into the data center at an unprecedented pace, driving an increased need to accommodate high-performance workloads, such as big data analysis, and new architectures such as private cloud, to satisfy the needs around the data influx. One and the need for performance on another are serving to create ripples on the data center vendor marketplace. In particular, the ASIC server market is undergoing changes as heavy workload requirements draw customers toward targeted proprietary solutions, while starved data centers veer toward lower-cost options from smaller, aggressive x86 server vendors. Enterprises continue to represent a large chunk of revenue opportunity for data center vendors, but the growing mid-market is creating even more changes in the storage market. Or can a storage vendor hope to sell only arrays or plain Jane storage products and expect to survive in a market teeming with innovation? Vendors such as Dell, HP and HDS combine highly useful technologies such as automatic tiering and others with their storage offering to gain action among mid-market customers looking for more storage efficiency. The larger players are sitting still because NetApp continues to expand its presence in this space, while C is making a huge push down into the mid-market where plenty of opportunity lies. 6 server vendors have always had access to cutting-edge processing technologies, but the Xeon platform is working to level the playing field among server makers thanks to its comprehensive approach to system architecture. The market continues to be dominated by the likes of HP, Dell, and IBM in terms of revenue. It's wide open for smaller players to gain market share with hardware that delivers the high performance required by today's demanding workloads. Vendors such as Lenovo, Acer, NEC, and Supermicro are providing feasible options for small and mid-sized data centers that aren't necessarily swayed by name recognition. Of course, not just name recognition that makes HP and Dell leaders in the x86 ecosystem. 12G servers and HP's Gen 8 servers continue to generate positive feedback among customers, and quarter revenue increases reflect that satisfaction. Another factor that gives HP, Dell, and IBM an edge over the smaller server players is their wide-ranging ability to add services, software, and support around their newest generation servers. TBR is that the amount of traction that smaller x86 server companies can gain in this market is tied to several factors. One is that the ability to bundle services, software, and support with server sales. Companies such as Dell and HP have long-standing customer relationships that allow the vendor to more easily sell services and support. Critical to the success of small x86 vendors is the ability to find suitable partners, both for technology expansion and graphic expansion. An example of such a partnership is Lenovo's new joint venture with EMC, which will allow Lenovo not only to approach customers with an industry-leading storage conversation, but also it will put a crucial foot in the North American door. For an x86 server vendor looking to compete against stronghold vendors such as Dell and HP, this is a sort of strategic move that TBR considers wise. We expect that other smaller server vendors will seek and ultimately announce similar relationships. And most of you already know, Dell are the market leaders in the x86 server space. But spot as the far and away revenue growth leader reflects the building dominance of Converged systems. Everything on the Converged game, from HP and IBM to NetApp. Its relatively early start, Cisco is growing revenue at a much more significant rate than other Converged players. He believes that part of this success is related to Cisco's fervent work to continually innovate the UCS platform. This area behavior for a company that faces plenty of growing competition, vendors pouring billions of dollars into research and development for Converged systems. From a market perspective, TBR expects that Converged systems will help prevent the complete flattening of the x86 market, because systems, including Dell's new active infrastructure, are geared towards high-performance workloads that also exist in the world of proprietary servers. So these systems will prevent proprietary servers from pulling away at least some of the data-intensive workloads that continue to build in number as big data continues to infiltrate data centers. Look at the chart from the data center benchmark. We see several of the vendors exhibit similar year-to-year growth. But the one that's the clear revenue leader, and that's Cisco at the right, is putting most of its eggs into the convergence basket, at least from a server perspective. Now exists to at least some extent in most data centers. It has given data center managers new power and flexibility. They need to improve the speed to server deployment. First, the number of virtual machine images is growing so quickly, administrators find themselves dealing with the unwieldy problem of virtual server sprawl. Further, it can be difficult to predict the behaviors of applications in virtual environments, and so performance and recovery. Converged helps to solve these problems by delivering a more predictable path to server deployment and application behavior. This is why Cisco, for one, is seeing continued success with its UCS platform, and also partly why vendors such as Dell, IBM, and HP are funneling billions of dollars into similar platforms. Systems also deliver value through other means. For example, they free up IT staff from basic operational tasks related to configuration and application deployment, in turn providing more time that can be devoted to actual innovation. Also, because these platforms are developed from a converged perspective, bidders are more apt to trust them when immediately deployed more sensitive business processes, especially used in private cloud environments. On the x86 server front, we continue to see customers drawn to the strong price performance value proposition offered by systems that fit a variety of data center budgets. We're seeing vendors working to create systems that can handle a variety of workloads, which allows them to enjoy higher average selling prices and better profitability. TBR still anticipates that the most success in the x86 server space will be found among vendors that can integrate their servers into stacks that meet specific demands of data center customers. Staff are constantly asked to do more with less, and as a result are veering towards converged infrastructure to save time. One of the drivers to success in the converged infrastructure realm is partnerships, and continues to see growth through its ability to connect with leading vendors to derive new use cases for UCS, such as big data analytics. Reliable, fast hardware is also key for success in the x86 space, as shown by the revenue leaders of HP and Dell. IBM is finding success with its high-end System X offerings, thanks to its ability to tune servers to accommodate mission-critical workloads. As infrastructure continues to seize most of the server headlines, proprietary servers almost seem to be an afterthought. Vendors are moving forward with these systems with huge investments in innovation. They're impressive and enough to lead TBR to believe that proprietary server vendors will see an uptick in revenue in the coming quarters. IBM, for its part, released its Power 7 Plus microprocessor, which improves performance on application workloads by up to 40%. We'll also be releasing new architecture in the coming quarters. On the pure performance of these systems, something helping to keep them relevant in the face of high-performance x86 systems is the ability of vendors to add new cloud and other service-related capabilities to the platforms. It's this of overall value that attracts new customers to proprietary systems, assuming they're already familiar with the high fault tolerance and security of the systems. It's the strategy that's also helping to keep mainframe servers relevant, at least in terms of vendor strategy. For example, while actual hardware sales of mainframes accounts for just a portion of IBM's overall revenue, the vendor is in plenty of profits by bundling storage, software, and services with the server hardware. Proprietary server landscape, it's no surprise that IBM is a clear revenue leader thanks to its continued innovation with the Power and System Z platforms. The entire prop server market continues to struggle, not only from macroeconomic conditions, but also from the increased pressure from x86 server sales. Still, high-end workloads such as big data analysis, modeling, and simulation grow across various verticals. The specialized servers isn't going to diminish. TBR believes that the continued innovation efforts by IBM, Oracle, NEC, Unisys, HP, and others will put saving grace for the market moving into 2013. Proprietary server vendors understand the unique needs of their customers, primarily when it comes to high performance, security, workload monitoring, and visualization. However, with the advent of converged systems at similar prices on the lower end, proprietary systems are becoming a tougher sell. The key market where the lines of demarcation are increasingly blurred, IBM, Oracle, and others must target specific customer pain points, such as Hadoop integration, revenue, and unit shipment growth. Interestingly, the proprietary server market isn't quite as proprietary as it used to be. This is moving its mainframe server line from its proprietary CMOS processors to Xeon processors. They're seeing more blurring of the lines between proprietary and x86 servers. Unisys says these Intel-based mainframes offer performance similar to mainframes such as System Z. Still, this is an intriguing development that shows the potential for x86 platforms and a threat to proprietary platforms. News in the storage market continues to be efforts by storage vendors to accommodate the influx of big data. Data centers are sufficiently meeting demands for storage capacity. They still help with simplifying their storage configurations and find better ways to be more flexible with deployment. Technologies like automated tiering are providing real value to customers who now deal with a variety of data types and afford to place all data on the fastest performing storage. Although C remains the number one storage revenue, the plan of action is happening behind it. For example, the number 2 and 3 revenue leaders, HDS and HP, are using acquisitions to help build out their storage portfolios. HDS recently acquired Cofio, a data software vendor, while HP acquired Left Hand Storage, a utility storage provider. TBR believes these types of acquisitions will help storage vendors to go to market with a far more well-rounded storage portfolio that speaks to the expanding pain points of storage customers. On the server market, the data center storage market is a far closer race. Although C has a sizable lead in gross margin, the race for second place is tight as vendors scramble to seize market share. The big battle is being fought in the mid-market, where it has had a historically strong presence. However, NetApp posted a revenue decline of 7% in 2Q12, following 12 consecutive quarters of double-digit growth. EMC, for its part, is increasing investments in mid-range storage offerings, bringing some of its best-of-breed technology down to lower budget areas. HP, Dell, and IBM also continue to make a strong push into the mid-market, but also to larger enterprises. Requirements continue to expand. There will be billions of dollars in opportunity for storage vendors. How the market shakes out will depend on vendors' ability to satisfy customer needs for not only performance and flexibility, but also affordability. As a comparatively small market share, it is experiencing high levels of growth. In fact, the company added 1,000 R&D staff to its storage products just this year, which led to the company announcing a far wider range of storage products than what it currently holds. TB believes that Huawei will continue to show high levels of growth while expanding its market share through this increased research and the resulting expanded portfolio. Because of competition in the storage world that shows very small levels of differentiation, often that we see huge spikes or dips from vendors in this space on a quarterly basis. But the surprising dip in the second quarter comes at a time when there's very little room for error, because many vendors are looking to take advantage of opportunities with technologies that each bring to market unique benefits for storage customers. And keep that more changes are ahead for data centers that will not only have an impact on storage customers, but also the strategies of the vendors selling to those customers. The Windows 8 means that users will have more ways to create enterprise data, because the use case scenarios for mobile devices will finally be considered legitimate by the remaining IT staff who have been holding off on allowing the use of mobile devices in their environments. Inside these new touchpoints will be generating data with unrelenting regularity and placing new huge demands on storage infrastructures. There will be those who not only provide hardware that can store and deliver this data, but also provide the software necessary to derive value from that data. Storage vendors invest heavily in analytics and similar technologies. TBR believes that this is the move to keep pace in a highly competitive market. On the side, we expect that IT decision makers will make storage a spending priority in the coming quarters as they continue with the ongoing trend of aligning IT with business goals. This quarter, we're focusing on a number of areas in the data center space. First, we're looking closely at how data center vendors are using alliances and acquisitions to further their reach into new locations and markets. We're also looking at the continuing evolution of Flash, as well as how new x86 platforms are allowing more vendors to compete in the server space. We'll also be working to assess the impact of enterprise mobility on the data center, including the impact it will have on vendor strategies. Allison?
Great, thanks, and thanks for those of you who sent a couple questions. First question that's come in is, what impact are microservers currently having on the x86 market?
Well, I think at the moment we're not seeing these servers putting any kind of significant dent into the sales of traditional rack and blade servers. But I think it's safe to say that the impact is coming and the potential to pretty much turn the traditional data center model on its head. We've been moved toward virtual infrastructure, but of course microservers have the potential to turn the tide back towards a sort of physical infrastructure. And the thing here is that centers can get all the benefits of a physical infrastructure without using the space or power typically associated with rack and blade servers. So instead of deploying more virtual servers to handle services and applications, data centers can deploy actual servers. And things like Hadoop continue to gain traction. I think we're going to see microservers also gaining traction very soon.
The next question has come in. Talk about how powerful the new proprietary servers are and how x86 platforms are more powerful than ever. Why aren't they replacing mainframes? That's
a great question. I would say that, for one thing, mainframes are typically very integrated in their environments. So moving workloads off of a mainframe is no easy task because not everyone really understands the level of integration that mainframes have in a given environment. If you pull off a certain business process, it can be tough to determine exactly how many things it's going to affect in that business. And it's not so easy to simply replace a mainframe with a collection of other servers. I would also say that a mainframe can handle a massive amount of data processing in a data center, and then you add in the reliability and the availability typically associated with mainframes, and it's a pretty tough proposition to simply replace one or even several. I think a fair common misperception is that mainframes are sort of an old technology, but mainframe makers are constantly updating these platforms. Technology in them is just as current as technologies in cutting-edge rack servers. Of course, there's a major difference, and that's that one mainframe server can handle the entire data capacity of a data center full of x86 servers.
Great. One more question come in. It looks like it's a two-part question. Do you feel that IT departments are generally for or against converged systems? Does deploying mean that there's less for them to do and possibly more of a reason to let IT staff go?
Well, first, I can tell you that IT administrators will generally jump at a chance to not have to spend weeks or months configuring systems. And a converged system can be up and running in just days. After that initial up and running process, there's still plenty of work left for IT departments. And if anything, these systems give IT staff some time to work on innovation and other activities that help to align IT more closely with the business. After all, it's tough to help drive the business when you're wired in cables and connections across the data center floor. And because there's so much data pouring into data centers today, there's really more demand than ever for IT to optimize capacity and to find new ways to utilize that data.
Great. Looks like we didn't have any other questions come in. So thank you, Christian, and thank you for everyone for sending in your questions. We've enjoyed the interaction today, and we look forward to continuing the dialogue with you. Before we sign off, I'd like to encourage you to follow Christian and TBR on Twitter at the Twitter handle listed here. and also to encourage you to check out SlideShare and YouTube for both, information about this webinar, as well as other webinars and collateral content that we've put up there. We're going to have that function open for another few minutes in case anyone else has any additional last-minute questions. Otherwise, we look forward to seeing you guys all again next quarter. Thanks.